All right. Hello and welcome to another episode of the Bullish on Bitcoin show. Today we have with us another rockstar guest. We have Nadia Song from WBTC, the most important DeFi asset probably in crypto right now for last years, right? WBTC is what made Bitcoin go DeFi many years ago. In fact, it's been 2019. So yeah, it's been a while, and WBTC to this date has remained the main way to use Bitcoin on DeFi. Nadia, before we dive into all the interesting questions, one thing we love to ask is, about yourself. How did you end up working at WBTC? How did you get into Bitcoin? What's kind of the story that got you into the space?
Sorry, no romantic story. So they were looking for someone, and I was hunting for a job.
Fair enough.
But of course, after I read the JD, I was like, I tried very hard to get it because I really love Bitcoin. I think Bitcoin is the future. So yeah, I really tried very hard to impress.
Okay, fair enough. So tell us, I think, one of the, WBTC is something that everybody who has used DeFi knows, essentially, right? It's the backbone of some of the biggest DeFi protocols in the space. It's one of the backbones of MakerDAO back in the day. It's one of the backbones of Aave, of Morpho, of Spark, of Uniswap, right? It's essentially Bitcoin in DeFi. And there are other wrappers that have followed since then, but WBTC has remained number one by a huge margin. But I think it's always interesting to look back and kind of at how this all started. I remember when WBTC first launched. Fun fact: we were working on trying to build a more decentralized version of something of like Bitcoin bridging at the time, and then WBTC launched, and it was initially small, right, a few hundred Bitcoin, and then suddenly, boom, it went up to 100,000 very quickly when MakerDAO listed it as collateral. Could you share maybe with the listeners just, some backstory, how that all happened, and what essentially led to WBTC being created? Why was it created at that time? How did it become so big? Any kind of inside stories, I think, are super interesting.
Okay, I don't know if this is super like a mystery or what that I'm gonna review, but it's just a very normal like how we began. So in like 2019, like how we adore Bitcoin, and then we thought that Bitcoin needs to do more. And back then, Ethereum was the star, right? So if only we could use Bitcoin on Ethereum, whether as a collateral or providing liquidity or as a tradable asset, I think that would be very useful for the whole ecosystem. And so then we started having wrapping it, right? Because we all know that make Bitcoin on the native chain, they can't do anything. So yes, we can't find Satoshi, he's gone. We can't upgrade the contract. So we wrapped it and sent it to Ethereum. Right. And since crypto summer, yeah, so initially it was just like, okay, a few hundred to few thousands. And then suddenly in crypto summer, it just boom, all the way up to like 200 over 20,000 of BTC. Yeah. So then the story began.
What do you think was the catalyst that got people to use Bitcoin in DeFi's WBTC? Because, DeFi Summer obviously happened in 2021. But why Bitcoin? Why not other assets? Why not only Ethereum? What do you think made people really move the Bitcoin over?
I think every one of us who start crypto, we normally start with Bitcoin or Ethereum back then. Yeah. So, and then so when people start to realize that Bitcoin has a utility beyond storage of value, there it goes. And then so happened that MakerDAO make the utility become a purpose. Yeah, and then plus during the crypto summer, we see people swarming in, and every one of them would have like some Bitcoin with them. And so, yeah, I guess it just coincides with the time, the sequence of events, and then yeah, boom, it comes.
So when we talk about Bitcoin and DeFi, right, one of the biggest challenges has always been, right, Bitcoin is slow, Bitcoin can't do DeFi, right? You can't really build anything directly on BTC easily. And so what people ended up doing is if they want to use Bitcoin for anything more than payments, they had to go to a centralized exchange. But with WBTC, you suddenly don't have to do that, right? You essentially can now use Bitcoin in DeFi. You have full transparency of what's going on. You can basically compose. You have one wallet and you can access trading, lending, and all sorts of things without having to sign up with 5 different exchanges. What do you think? One of the arguments against WBTC that has always been brought up is that it's custodial, and it's obviously a very contentious question, right? Bitcoin maxis, including myself, right? We've always, and I'll admit, I was one of the people saying, "Oh, it's risky," there's custody. I would say in my younger days, in the less experienced days, when we were like very opinionated about building for ethos and not really building for the user. Looking back, obviously, WBTC has proven that people prefer simplicity. They prefer institutional custody. They're very much happy with that. For institutions who bring lots of liquidity, they want to know who holds the keys. They very much trust the custodians behind WBTC. How do you feel this has evolved over the last years? Did you guys have a lot of resistance initially? Or was it more on crypto Twitter, but behind the scenes, everyone's like, yeah, look, this is much better. Let's just use WBTC. Or did you also have resistance from the institutional side, from power users?
Like for institutions, especially, they would still prefer a very well systematic custodian, licensed, regulated. But then on the other side, they would also like to make sure that the system is not abused. So WBTC actually countered that by offering transparency. I mean, like even today, you can just like go to our website and there's just a tab called transparency, and you can see all the 1:1 reserves, proof of reserves is all up there, right? And so when you talk about this Bitcoin masses, sometimes we can't change their mind because self-custody is the core principle of Bitcoin, right? And that's something we respect. We never intend to replace holding native BTC in your own wallet. It's designed for users who want to put their Bitcoin to work within DeFi. And so one of the Bitcoin's original goals was to create an open, permissionless financial system. And DeFi extends that by allowing Bitcoin to participate in lending, trading, and other financial applications without relying on traditional intermediaries. So from a product perspective, I'm not asking you to trust WBTC because of its reputation, but users should be able to independently verify that every WBTC is backed 1:1. And again, I would say, again, on our website, you can see that. So, to conclude, different users, they have different trust models. Some, they value self-custody, while others, particularly institutions, they still require regulated custody, operational controls, and auditable processes. I mean, 116K of Bitcoin. Are you sure you really don't want someone to answer for it?
Yeah, I think it's kind of funny, right? Because within the Bitcoin ecosystem, within Bitcoin community, and again, I will admit, I counted through that in a group a while back. I've since converted to become more pragmatic and more practical, and we started building products rather than just doing research. But when I was, I got into crypto through research, and I was doing my PhD actually on security of cross-chain bridges and looking at that. And at that point, obviously, you're building for the ethos. You're trying to build the best system, and you don't think about products as much. And realistically speaking, right, there's always custody involved when you bridge Bitcoin, right? Because Bitcoin cannot really verify other chains. And yes, we have BitVM, that is a very advanced concept that gets close, but it's not perfect. Like, it's impossible ultimately to do in a perfect manner. So there's always a trade-off. And with WrapBTC, right, you have on one side, you have the centralized exchanges where you just deposit, they hold your assets. Often there's no proof of reserves. You have no idea what's going on. They might be rehypothecated and so on. And then you have on the very extreme side, you have something like BitVM where, it is trust minimized and there is like very complex tooling and cryptography to really make sure that, nobody really has the keys. But then you have the technical risk. And I will admit, right, I mean, I worked on trying to build competitive design systems that are more trust minimized that, make WrapBTC obsolete. And I will admit that that didn't work, right? And I think the lesson learned here on our side was, well, look, WrapBTC, I guess, has found product market fit. The market spoke for itself. It's the biggest wrapper out there with billions, essentially, at its height, minted onto Ethereum. And I guess you have a sweet spot between, yes, there is institutional custody involved, but you have proof of reserves. So you know that the Bitcoin isn't being rehypothecated, and you can actually then trace what happens in DeFi. But you are the first wrapper, I guess the first Bitcoin wrapper at scale. There have been wrappers before on Blockstream's chain, but WrapBTC was really the first big wrapper at scale. What did that mean essentially early on? Did you have to do a lot of the educational work? Did you see a lot of backlash from Bitcoin maxis? Or was everybody more or less embracing it pretty quickly? I mean, there was this hockey stick curve that everybody likes to see from any new product, any new startup. How were the first months before essentially MakerDAO kind of picked it up?
So I wasn't there from the start, but then I would say that, initially a lot of people were skeptical. Plus, when you have all the big Bitcoin masses telling you that, you don't own the key and that's risk. But then you just need a group of people to start doing and then prove to you that they are benefiting from it. And then people will just come. They start to open their mind. So, I mean, DeFi is a word that we should never stop progressing. We should always be innovative, right? But Bitcoin should not stop at where it began. If you love Bitcoin, you should allow it to progress.
Yeah, I mean, that's a fair point. So maybe, instead of delving too much into the history, which was kind of the first theme of the show today, let's talk about where WBTC is today. And I think, can you shed some light of what it means to be essentially a piece of infrastructure that is so critical to DeFi, right? If WrapBTC were to break tomorrow, I think DeFi as it is today would no longer really exist, right? There's so much dependency on this system, right? It has been around for so long without issues, right? But what does that mean? How does that change your processes? How does that, how do you deal with that responsibility? What does that mean for WrapBTC essentially? I think there's very few companies in the space that have this kind of, systematic impact on the entire industry, at least for DeFi.
Yeah, with billions of TVL, so the WBTC now operates more like a systematically important financial utility rather than a standard crypto product. So, when deciding internal decisions, now we normally prioritize high security, legal clarity, and safety of our users. So there were a lot of times that we couldn't become more innovative or more creative, and that's because our priority always lies in security. But to assure you, our vision still stay the same as day one. It is for Bitcoin to transcend its native blockchain, and for WBTC to serve as the universal standard of BTC across all chains.
So if we, having that kind of responsibility, right? The interesting part is that you're almost as constrained, I guess, as Bitcoin itself. Not obviously as extreme because Bitcoin has the organization, but ultimately you can't move fast, right? Because there's so much dependency. If you change one thing, essentially it impacts Aave, it impacts Morpho, Spark, USDS, and essentially a lot of other ecosystems that basically are the foundations of DeFi, and then everything that's built on top. I mean, one of the things, right, I think where WBTC kind of opened up the arena for other competitors was the cross-chain expansion, where WBTC primarily existed on Ethereum and then on Tron, and now obviously there's more native deployments, but it took a while for this, I guess, for WBTC to natively expand until I guess the layer 0 integration. And that gave space to more native, right, smaller wrappers. Like Avalanche launched its own, and you had like smaller new wrappers and go and target specific new chains. How do you balance that? Like, what's I mean, perhaps like what's the goal of WBTC? Is there like a goal to really have more and more BTC in DeFi and to kind of dominate, or is the goal to preserve and like have stability? And what do these other competitors mean for WBTC? Like, is it like direct competition behind the scenes, or is it more or less okay? Like the smaller ones focus on like niche use cases, and ultimately they all need to be settled against WBTC one way or the other for larger integrations into DeFi.
So I think competition is okay. Right, we welcome competition. I think it's healthy because it pushes us. Right, what if WBTC like Bitcoin just stay as it is for 10 years, 20 years? No, so it pushes more innovations, and it pushes us to become more on our feet, on our toes. Right, we want to be careful, and of course, but you know, WBTC is a little bit different from the rest because we don't own a chain. We don't own a CEX. We don't have a protocol that we're trying to push liquidity towards. And it's integrated across hundreds of protocols because nobody sees it as a competitor. We're neutral. And so being neutral is our value proposition. WBTC exists for Bitcoin, not for whoever who issue it. Plus, we have the deep liquidity across the major ecosystem. And then again, we're transparent. We are high-level security. I mean, it's multi-sig, globally distributed with bank-grade security. We're licensed and we're operated under regulatory frameworks. So this gives us the edge. But then we will not be complacent. We will not just stay here. We are always monitoring our competitors. We're interested to know what they're doing. New products, right? Learn from them, but we wouldn't want to lose our dominance. Nobody would want to. But I think that is something more beyond what I just described. Is the whole crypto market is shrinking. I would rather all of the competitors come together and crack their brains to think how we can bring new source of incoming traffic rather than pitting against each other. You know, like very often I would see another chain and then they would come and tell me, oh, what are you thinking of how we can get Ethereum users over? I was like, no, can you think of how you can get new traffic?
I mean that's obviously a very, I guess, a pro DeFi, pro crypto way of seeing it. At the end of the day, right, the amount of Bitcoin that has been converted into DeFi is still really a small fragment of what's out there in the market. I mean, if you look at, I think overall in Bitcoin and DeFi, I think it's like 1-2% maybe, right, of the total BTC supply, maybe more. I mean, but then you have 10% is on centralized exchanges, 50% sits out on off-chain custodians and actually does not participate in trading in DeFi and so on, right? It does that in an institutional way that you just don't see on chain, right? Like tri-party agreements with custodians. So naturally, growing the pie is obviously very good, and that I would think that's also what a Coinbase, a Kraken, a Circle, and a Binance will say when they all launch their own wrapped assets. It's become a theme, and especially during the hot time, that kind of the cycle of like where there's a lot of attention to Bitcoin after ordinals, when you had BitVM, Bitcoin staking, a lot of institutions had launched their own wrappers. Like cbBTC, I think, is the most prominent one, which has the most traction apart from WBTC. I mean, you've had Kraken's kBTC, you have Circle announcing cirBTC. Binance, of course, has their own chain, right? So that's a bit of a different case. How do you see the future evolving? Do you see WBTC primarily remaining dominant on Ethereum, which is essentially where you have this neutrality? Or do you see others edging in, trying to basically capture the markets? Because I think you have chains like Ethereum, like Solana, that essentially are neutral. And then you have, of course, Coinbase's base chain, which by design will be dominated by cbBTC. How do you see this evolving in the future? Do you see essentially things like cbBTC be primarily constrained to base and their own ecosystem, and WBTC essentially dominating the neutral ecosystems? Or do you see a potential switch? Do you see preferences with users? Do you see like a benefit of using one over the other? I think it's, for me, I don't see it like both are very good options. And it's more of like, okay, how can I get one easier? Like the on-ramp and off-ramp are probably the most impactful decision for me as the way I use DeFi. But I think, I'm sure you have more insights and ways to kind of, for users who are listening, to kind of understand the differences and what will likely happen in the future.
I think we will still continue to dominate, especially on Ethereum. In fact, on Solana, cbBTC is ahead of us by 0.8% in terms of market share. And you know what? I really envy cbBTC because it's so easy to mint. They have a CEX. You just go there and then you put your USD, your stables in, and then you get your cbBTC. But we can often see that, different kind of audiences would prefer different kind of system. So there are also some people who will say that, cbBTC is owned by Coinbase as CX. So if anything happened, GG, right? So again, especially institutional, they would still prefer, like I say, regulated custodians, and then with deeper liquidity. We still see institutions. They still prefer WBTC, and because they are institutions, normally larger amounts, they don't mind slower process of minting and burning. But for retail users, I would say that maybe Coinbase do have an edge against that because it's really so easy. But that's only for the American and the Europe market. I think very often we neglect the Asia market. They have a lot of Bitcoin there, not touch. Yeah, and WBTC has a very strong Asia team too. So, we are also working to educate Asian market. Like you could do more with your Bitcoin.
Yeah, I think, the on-ramp is certainly, I guess, it caters to different users, right? I guess retail users, they prefer to just one click through Coinbase. But to be fair, you need a Coinbase account. Coinbase is a big exchange, right? And I think it's a very good exchange, but they don't control the entire market. So I think also with the rise of platforms, to be fair, I'm also obviously going to have to plug Bob in here, right? With the rise of platforms like Bob that allow you to trade native Bitcoin versus WBTC and other wrappers with one transaction without having to make a Coinbase account at better rates, that kind of levels the playing field, right? So today, if you want WBTC, you can just go and send your Bitcoin through Bob Gateway and you just get WBTC on Ethereum or on, I think we support 9 other chains. It's not always native. It's like WBTC.OFT as well. So through the partnership with Layer Zero, and you can just get it, right? So you don't have to go to a merchant. So the fact that there's so much liquidity in WBTC kind of solves this problem itself, because for our solvers and Bob Gateway, it's super easy then to just offer this on and off ramp at very competitive rates, actually. So I think, we're hopefully helping kind of bridge that gap and level the playing field. So the on minting and on off ramp is actually no longer a big advantage or disadvantage.
Yeah, so we always want to work with people like yourself, increasing the sources to get WBTC. But I think there is something that we should also work towards too, is that, new babies, new DeFi babies, they normally new crypto babies, they normally come through CEX. So that's the advantage of CEX, Yeah, so how can we actually connect to these users and bring them to DeFi? Because the moment when they come into DeFi, they were like, oh my God. Yeah. And you have to admit that normally when we first start, right, we are a little bit more afraid to go into DeFi because, like, we will study and then Google and then AI will tell you, DeFi has no custody, it's not centralized, no customer service. So this is all like, no, I think I stay with CX. And we are starting to see CX being creative. They are starting to connect, integrate with DeFi so that users can just plug one button and go all the way. Yeah. So that's the edge they have against WBTC.
Yeah, I think that basically the transition from centralized exchanges being siloed ecosystems to essentially you have now Binance Wallet. Okay, every big exchange has their own wallet, which is has both kind of views, the custodial platform, right, on the exchange, but you also have the non-custodial wallet where you can easily go between. And why do they do that? Because they want to keep the users, but they know that people will go into DeFi. They were losing users into DeFi. People would come into crypto and then they would stay on the exchange and eventually move on. Now, and to be fair, I think many exchanges have done a very good job. Like OKX is a very good wallet, Binance has a very good wallet, BitGet. There's very good wallets out there where you just transition through, and now you're in DeFi. And I think this user group is actually the most interesting one because they like one step into DeFi. They're not fully in DeFi yet, so they're still within whatever the exchange filters and will show them. Same with Coinbase, right? But they're already there. So these I think are the users that are easiest to convert to basically then say, oh well, let's I can move my Bitcoin from Coinbase or from Binance into WBTC and then or something else, and then just trade on chain and hold it in my on-chain wallet. It can be even in the exchange wallet itself, but it kind of is just it makes this like DeFi step much more convenient. So that's I think a very good direction. And you have to give the centralized exchanges credit because ultimately that's led to a lot of more users actually getting into DeFi and versus staying on centralized platforms. So I think they did that to prevent users from leaving. But what happened is that even more users then started coming because it became so easy.
Yeah. And they could just, borrow via the CX now.
So when we talk about, like borrowing, I think is a good hook for the next kind of topic. WBTC is like essentially, I think, again, whenever people think about, what are people using for Bitcoin and DeFi, they look at WBTC. What do people do there? They use it for, I think, number one is collateral, right? So basically using Bitcoin as collateral to mint a Bitcoin-backed stablecoin or to borrow stablecoins and then do something with it. What are the other use cases, or is it really just collateral? Like, is that really like the main thing, or do people do other things with WBTC? Do they also trade on chain? Do they buy, sell, or is it really once you're like, because we see what Bob gateway users do, and primarily it's going into Aave, Morpho, Spark to some extent. Some go to Uniswap and basically when they want to trade, or they put now also yield basis, which basically allows you to earn basically I would package this as more like an earn vault, so earn on your Bitcoin kind of thing. But that's essentially the main things. Like, is that it, or are we like? Is it basically Bitcoin is the best collateral, so people want to borrow against it, they want to earn against it, or is there like more that's coming?
I think regardless of the protocol or user, WBTC is primarily used as a collateral. Every time when there's a lending protocol that comes up, they always think of like Bitcoin collateral, and WBTC would be one of them. Yeah, and so in the past, and we also see trading desks trading it a lot, right? And yeah, and then so we used to see people would provide liquidity to it too, but then now the prices of Bitcoin are so volatile. We're seeing retraction in that segment. Even me myself, I stop putting in money. Yeah.
Yeah, fair enough. Yeah. Yeah,
Yeah.
LPing is not for LPing is really for pro users. It's risky because if you don't pay attention and don't properly manage, it's basically you're playing market maker essentially, right?
Yeah, but then you know what, Radium, they have this AMM where you can just park it and forget about it. But the fees are, of course, are very much little. But then again, like I think it's okay for like users who just want to like have a little bit and they just want to see some returns. Yeah, but then if it's a large amount, given that the prices move for Bitcoin, then it might be risky if you're not careful, you don't monitor.
Yeah. I think so. We talked about RapidBTC, like essentially the main use case being collateral. What are the new things that where you see the adoption of RapidBTC collateral? And I remember now my question. For a new project building in the space, right? What is the argument of using RapidBTC over doing something yourself, right? You see, and I think Hyperliquid is one of the alternatives that people look at, right? They launch their own product, they have their own chain, they have essentially their own Bitcoin wrapper inside the platform. What are when somebody launches a new protocol, what's the argument? What's the pitch for them to just use RapidBTC instead of doing their own Bitcoin bridge, instead of doing their own kind of Bitcoin wrapper?
No, just go to DeFi Llama. It tells you all. and yeah, I mean, we normally would tell them, we live with aspirations and we would like to support, but you may want to look into how many more Bitcoins are there in the market and how they are doing. And for those that are doing fairly well, they have put in a lot of effort and money. And wrapping Bitcoin is not something like very lucrative. It's not like we could do anything with a Bitcoin, or it's not like it brings us anything. Yeah. So if it's revenue thereafter, I suggest they think twice. And if it's just for thinking that because wrapping it up can bring them more users, I would say using WBTC will drive you more users.
Right. I think also one interesting metric is the utilization rates in DeFi, because if I look at DeFi Llama, I see a bunch of Bitcoin wrappers, and there's many of them, right? And it might seem like they have a lot of them have crossed the TVL threshold of where you say, okay, it's a more mature product. And you have to be fair, you have only a few, realistically, you only have a few Bitcoin wrappers that are really DeFi native, that are using DeFi, and that's RapidBTC, cbBTC, Lombard, LBTC, and probably solBTC. I think that's the ones that really kind of have been adopted and used in DeFi. But there's many, many more. And of course, you have Hyperliquid Zone, which I'm not counting here. And the interesting bit is that, if you look at the utilization rate, you kind of realize that, okay, there's a reason why some of them are used in DeFi, because it's organic adoption, versus some others where essentially it's just Bitcoin sitting in wallets and it just looks nice, but it doesn't really exist on chain. And it's more of it's just paper Bitcoin, but it's not actually used because you cannot use it. And that's a thing what many people actually don't know. If you recall, when the Bitcoin 02 hype was happening, you had, I think Merlin became the poster child of this. They were not the only ones doing it, right? But they became a poster child of these so-called self-custody BTC wrappers, where Bitcoin sits in a custodian. There's an IOU printed, but the custodian, you can't trade it, you can't do it. It just looks nice. And I think that's just, I think it's always useful to look at the market through that lens, because if you filter out the ones that are not really used in DeFi, then there's only RapidBTC, cbBTC, and 2-3 others left that actually use in DeFi. Of course, sorry, and I forgot TBTC, which, to be fair, is probably RapidBTC's oldest competitor. They have been around for almost as long as WebBTC, and they have a very distinct value proposition. And I think they offer, like, I guess, the alternative for people that really want. I guess trust is always a flavor, right? With WebBTC, you have an institutional setup of custodians. With TBTC, you don't know who they are, and I guess people have one preference or the other. The market, of course, has spoken in terms of institutional money. But yeah, I think, at the end of the day, the market is very efficient, and the liquidity will go to where people actually trust it.
You're right. TBTC is really a good product. I don't know, what do you think? But they're too DeFi. They have no one to push it. So that's why I think that you can't really do without like DeFi, right? Okay, let's stop talking about DeFi because the regulations are coming. What DeFi? No more DeFi.
Well, I don't know. I think DeFi will remain, and I mean, yeah. To answer your question, I think TBTC is a great product, and I think between TBTC, cbTC, between TBTC and WebBTC, you have like these two OG wrappers and two versions that basically, depending on what your preference is, you will use one or the other. But again, and the harsh truth is that none of the other wrappers today probably would be able to exist independently of WebBTC, because for lending use cases and so on, right? I think that's something many listeners don't know, but the biggest pain point of bootstrapping liquidity for a new Bitcoin wrapper is actually DEX liquidity. Because if you want to be used as collateral on Aave or Morpho, there needs to be sufficient liquidity on the DEX paired with another asset. So with stablecoins, because that's what you borrow against. And it's very expensive because, as you already mentioned, there's volatility, there's impermanent loss. LPs expect high returns, right? The rates should be quite significant, 20%, 25% APY. Otherwise, it's not worth the risk of putting money there, especially for professional LPs when they're the first. And so what happens is often wrappers will create a stable swap pool to WebBTC, because WebBTC has liquidity to the dollar, to stablecoins. So essentially, the funny thing is that WebBTC liquidity is essentially the hook for other wrappers. So if WebBTC would disappear, so would most other Bitcoin wrappers today as well, because none of them, and it's not even a bad thing, it's just because the market's very efficient, they're being very smart about it. Why overpay for their own Bitcoin and to stablecoin liquidity? Some of them do, to be fair. The more mature ones, of course, have both liquidity, but it's expensive, and only very few can afford to actually maintain that. But yes, DeFi and regulations, I think that's a very interesting one. What's the position of, like, from WebBTC's perspective, right? Because ultimately, when dealing with institutions and basically, of course, being very close to that side, would it be fair to say that WebBTC will be one of the first to actually feel the pressure, feel the heat, if the regulator really starts to move in?
I think not just WBTC. In fact, the centralized exchanges first. And I think some of them have already started feeling the impact. Next might come is Bitcoin. Because, we all view Bitcoin as something like digital gold, right? I don't think WBTC will be the first to feel the pressure. But our compliance team are very sensitive towards regulations, adaptations. So, and we always monitor closely, and then we try and adapt.
Oh yeah, I still count WBTC into the DeFi group, right? Centralized exchanges are not DeFi, right? So from the DeFi setup, right? You clearly are essentially bridging this gap for institutions to move their Bitcoin, and you have like a qualified custodian in the background. I guess an interesting question is like, do you worry? Because there's not much you can do. Once WebBTC is in circulation, you have no control over it, right? It's not like you could freeze or stop anything. You can, like, if there's an exploit and a hacker moves money, like, there's nothing you can do. I'm not sure if this is a topic we can talk about, obviously. But like, how does that, and this affects any asset issuer, right? Stablecoin issuers, and Circle has been heavily criticized for not freezing funds when a hacker basically is moving funds between different chains. And they're in a very tricky position, because without a warrant, if you start freezing, where is the precedent? Like, where is the limit? And USDT takes a different approach where they are very proactive. How does RapidEC handle that? I guess because you don't necessarily bridge between different chains on the DeFi side, you're less affected, and it's just the bridge from Bitcoin into RapidEC, and I guess it goes through merchants. So I guess you're kind of very well protected there, I assume.
I think prevention is better than cure. So our security team does a lot of see, I'm not trying to challenge you. I don't want to invite trouble, but then the thing is that we always think that we should always look out for any vulnerabilities. For example, like this quantum thing, right? So before it comes, we are already like starting it and trying to see how we can counter that, right? And then in terms of like how would we react or respond, we can't reveal. Yeah, and it's normally a chicken and egg story, right? The moment you free something, they say, "Oh, you see, they are so centralized, right?" You will see someone talking about it, and then if you don't, they will say, "Oh, look at them! They don't try and help." Yeah, so I would say prevention is better than cure, and I can't say what is our response or how would we handle, because it is so difficult, right? Yeah, and
that makes sense. I mean,
we hope nothing like this happen. Yeah.
Yeah.
Leave us
It is a tricky
alone.
one. It is a tricky spot, right? I mean, essentially, as you say, if you move, then one side screams and, "Oh, this is not DeFi," and you're freezing, and you're basically like a bank. And if you don't do it, then you're the bad guys. Although the bad guys are the hackers, right? It's a tricky one to be in, and it's generally DeFi has this problem of like, where do you find the fine line between, say, protecting user interests, but then if you are the one protecting, essentially you're the one deciding. And then, well, what if you decide wrong? What if what is right or wrong? When do you freeze? When do you unfreeze? It takes us back to the DAO hard fork on Ethereum, right? Was that right? Was that wrong? To this day, there are still debates about it. We have a somewhat different, changing gears here a bit. We have a question from the audience. We rarely take questions from the audience, but I actually have that on my list as well. And it takes us back to an early topic that we touched on about cross-chain expansion of RapidEC. So RapidEC, right, started on Ethereum and on Tron, and then eventually now we have native RapidEC. If I look at the transparency dashboard, right, there's on Solana, on Tron, on BSC, on Base, on Aave, and on Osmosis. So these are the ones that are natively minted by merchants. Is that correct?
Yeah.
But then you also have a dozen more, 20 plus probably chain, like at least like 10, 11 chains more that also have RapidEC through layer 0. Can you tell us more about the differences here and what that, like, what's the difference between RapidEC and RapidEC.OFT, which is basically, it is native RapidEC bridged through layer 0 to networks. Is there a difference to the user at the end of the day, and kind of how do these two compare? Are they complementary to each other? Because I think there, like on Ethereum, there's just RapidEC. There is no layer 0 version. It only exists on chains where layer 0 provides the bridging.
Right. So when we say native, it's just the WBTC living. It was born on the chain. So there's no intermediaries. It was just born there and then it leaves there. So when it crosses chain, in fact, any cross chain, right? They actually lock the native WBTC that was minted, and then release the OFT version onto the chain that you requested. So both have its own advantages and disadvantages, because when we talk about layer 0, for example, they have like about 20 chains, and so because it's able to cross, liquidity is sufficient. So they have a very deep liquidity there. So there's no problem, right? This is the same thing that I always tell protocol chains when they have a hard time deciding. So, but then for native, the chains themselves would have to be able to keep up to the supply. And, because it doesn't allow cross-chain, it becomes isolated. So that is to say, you must have very strong use case that people want to stay here for a very long time. If not, then I might not even want to start going there. You make me say too much secrets, huh?
Right, but that's, I think, a good point. So with RapidBTC and OFT, essentially, they allow you to go between different chains, right? And it's basically for neural networks that just want Bitcoin, it's very easy to get it without essentially having to set up a native minting, like basically go through this native minting setup, which is, I guess, so native minting, the way I would understand it, and correct me if I'm wrong, native minting and the chains that have native, like basically it's easier for institutions to go in and out because they can move large amounts through the merchants directly. Whereas for DeFi composability across different chains, if you have use cases where people might go in and out, where they might run a strategy here, but then they might want to move it to something else. If you have like vaults, which then deploy to different chains, then you might actually want to use something like the OFT version because it's easier to go between different chains. And again, if OFT goes through Ethereum, it becomes RapidBTC, right? So it actually uses, I think, the Ethereum version as the core. So it's a lock and mint bridge, right? So it locks RapidBTC in Ethereum, and then it kind of creates like the mints, like the copies of it on other networks, and you can interact with it easily, and you can always go back to Ethereum. So I guess that's kind of essentially the difference.
Yes, you're right.
Have there been any competitions between the two on like a chain like Solana or BTC, for example, where I'm not sure if the RapidBTC OFT exists on the chain where you also have native minting?
Solana, but it's not layer 0, it's a wormhole.
Right. Yeah, Solana is a special case. Yeah, because wormhole is the one that's bridging it there. Yeah. And how do you see the dynamic? Do people then convert once you have native minting, or like how does it usually play out over time? Or like what happened on Solana?
First mover first, because it's already there. And WBTC normally do not provide incentive. So, like they don't see, they are not incentivized to convert. Yeah.
Right. Makes sense.
Yeah.
So ultimately what you then got is, because RapidBTC, I guess what you then get is if you have RapidBTC natively on Solana and you have an easy way then like a stable swap to go between RapidBTC native to RapidBTC like wormhole, then you basically just got the merchant on off ramp and you can just go easily into the other one. So basically it's like getting a better on and off ramp than having to bridge to Ethereum. Okay.
Yeah, you're right. And so Solana is, WBTC on Solana is quite awkward because, let's say if that was layer 0, then like it could cross from other place. But then now it's wormhole, and then and then native. So the two of them are isolated. Yeah, but we have been trying to work with protocols to try and expand. Yeah, but apparently I felt that like Bitcoin lending and borrowings, this BTC is still more popular on the Ethereum chain.
Yeah, that probably is true. I think the majority of Bitcoin and DeFi is on Ethereum, and and you then have, of course, quite a bit on Base, but it's basically because it's coming from Coinbase, right? And there's like this direct integration from like with Morpho, where you can go from the exchange into lending. So it's
We see a good amount of WBTC on Arbitrum too.
True, right? That is true. But that WBTC version is actually native, so it comes to the native Arbitrum bridge, right?
Yes.
Yeah. Right.
Yeah.
So I think, and that's, to be fair, also, again, I have to plug Bob. One of the problems we try to solve is that we hide this complexity of different versions from the user because they emerge historically, and migrating is very painful. Like we did a migration on the Bob chain from the native RapidBTC bridge, which comes to the native bridge onto Ethereum, which is very fast to deposit, very slow to withdraw. And as a chain, you might say, "Oh, great, people can come, but they cannot go." But it's not good for like power users. And so we migrated actually to the OFT version, but it was a painful process, right? It takes time and it's slow, and people will forget that they have it there, and then you still have a lot of it, even months and months later, that still hasn't migrated, and you need to maintain the migration infrastructure. So that's why with Bob Gate, the funny thing is that Bob Gateway was first conceived to just let people go from Bitcoin into BTC wrappers on Bob. So you don't have to think about different bridges and just go, you have Bitcoin, you want to use it in Bob for DeFi, just go. And then we only later expanded it to being a full-fledged cross-chain Bitcoin trading protocol. That essentially, if you just want Bitcoin on Arbitrum, you just can go. You don't need to think about, oh, I need to go to Ethereum and then I need to use a native bridge. So you just can go in and out, and it hides the complexity for normal users. I guess, as we get to the end of the show, one thing I have to ask, and it's a bit of a spicy question, what do you think of trust-minimized Bitcoin bridging? Obviously, this has been a topic for as long as we can remember. We have BitVM. I am biased. I'm one of the co-authors of the BitVM 2 paper, so naturally we try to create something more trust-minimized. I've also admitted that I, of course, have embraced the value proposition of WBTC as being, after talking to power users and institutions, we understand better what they want. How do you see trust-minimized Bitcoin bridges evolving in the future? Do you think they will emerge and ultimately replace WBTC down the line because we will have something that's truly trust-minimized and people will eventually adopt that? Or do you think at the end of the day, institutions will never make that institutions will always prefer institutional trust over tech? It's a tricky question.
See, whoever gets the institutions, they get the bigger market share, right? Because that's where the big chunk of the money is. But it's just like corporate doing business with each other. They will still have certain requirements in terms of like security, custody, and regulations. You ask them to put something into something, putting their Bitcoin into something that is that is lesser accountability. Nobody to look for, nobody to ask for. I think they might be a little bit more worried. And but we do monitor and research these new innovations from time to time, and again, we are also trying to learn from them. And we don't view it as a competitive threat, more of a product for a different market segment. So I hope now the Bitcoin maxis, they can change their mind and maybe put their Bitcoin to work. So what we're saying right now is that retailers and crypto native would try these newer innovations, but larger institutions and funds, they will still prefer regulated custodians.
Well, my personal thesis for things like BitVM essentially is that they will start as independent bridges, as independent systems, but I think ultimately the success is to onboard the institutions, because ultimately BitVM, right, institutions started with simple Bitcoin multisigs, and then we went to MPC protocols, right, threshold signatures, which are more advanced, more robust. BitVM is, for Bitcoin specifically, the next evolution of basically it's a better way to custody Bitcoin. And it's still new, it's still very new technology. It will take time to mature, just like MPC was around for so many years before it finally got adoption in crypto for the first time anywhere. Before MPC protocols, I mean, in academia, MPC research was just theory. What would you play? Would you play like virtual, like theoretical poker games, and that was the use case that researchers would use. And suddenly, you had Bitcoin come up, and MPC wallets became a huge innovation, a huge basically push in that research direction. And BitVM, I think, with essentially emulating ZK proofs on Bitcoin, will also see its mass adoption with institution. That's why actually there exists things like BitVM/ACC, which is an institutional working group where we try to onboard institutions and educate them about BitVM, because we see it not as replacing institutions holding custody, but rather offering in the next years a tool that might be even better and more robust than MPC, essentially. So I think, having spent a lot of time in this industry, work with institutions, I think the way that new bridging technologies for Bitcoin gain adoption is by bringing on the institutions and essentially offering it as a better way to custody that is more robust, requires less worry about key management, and also in the era of regulations cracking down in the future, offers perhaps even a better protection on the regulatory side. So plausible deniability and so on. We shall see if that will be the case. But yeah, maybe one day WBTC will run on BitVM, who knows?
No, you never knows, right? Or maybe, like, and maybe like near future, we might even do something with AI.
Well, that's a whole nother topic. I think agentic trading, and to be fair, I admit I've also kind of like I think many people in DeFi started playing around with agentic trading. I mean, again, I don't want to completely derail the conversation, but yes, I agree. I think it will help bring more people into DeFi because it helps abstract the complexity even better once people start trusting agents. Once people trust agents with their money, I think DeFi will grow even faster because it's much easier for an agent to do trading in DeFi than you connecting all the API keys of all the exchanges, right? So I think it's just better UX and automation that will first happen there.
Yeah, if everyone could like earn their living so easily, then maybe we can stop doing AMA. We'll just lie and get money.
I think that's the dream, right? Let the agent trade for you so you can spend the money and not vice versa.
Yeah, but I think that's still a long way long because I mean, you and me would have like dabble around with the AI. They are good, but I don't think we can trust them 100% yet.
No, I think trust and with AI agents is certainly one of the big topics. I think, and I may be biased a bit, because we've done some work in that space, but I think trust and AI will be one of the big hot topics for the next year, 2, 3 years of like, how do you now make these things useful? How do you trust an AI agent with your money? Because right now here's a separate account, right? That's how companies do it now. Here's a separate isolated account where you can put some play money in, and maybe I lose it all, but that's not really, how we get people to really trust it. I think we need something better here, and I think it's actually going to happen. We're going to start seeing a lot of progress here very soon.
Yeah, but then because AI, you can't hold them accountable for. So when they flop, they'll just tell you, "Oops, I found an error. I found a bug. I'll make sure I'll never do that mistake again." And
that is true.
Yeah, and there's a lot of money we're talking about. So I think AI should be helpful in like providing tools, but not final judgment. We can't hand that to them yet.
Yeah, I would say right now, full automation, you could probably do that for a party portfolio where it's like, go do risky stuff. But yes, I think right now, most people want to be like the human in the middle. But I think in the next year, and it will go faster than we think, I think it will become very robust. I think that like right now you have AI, you have OpenClaw, you have Hermes, you have all these new tools. But nobody's really looked at the guardrails because it is a bit boring, right? Doing the safety stuff comes later because it's the boring thing. But that's what gets it mainstream. And I think it's going to happen very soon.
You're right.
Cool. Nadia, thank you so much for joining us on the show. Really enjoyed the conversation. For listeners, we'll have another Bullish on Bitcoin show coming up in the next 2 weeks with a very big guest that we'll reveal on Twitter soon. So stay tuned. Thanks for joining in, and see you next time. Bye-bye.